Welcome, dear traders. You're watching a recap of the Asian trade on April 3 with me, Kate Stichinen. And stock markets perked up in early April. The positive market sentiment is driven by a batch of the US macroeconomic data released on Friday. US stocks rallied in response. Global stocks opened on Monday with gains. Nevertheless, some regional factors made an impact on the Asia-Pacific trade. The core PCE price index eased its pace of growth in February. Besides, the annual PCI slipped to 4.6% in the top global economy, the lowest reading in the last 15 months. The evidence of waning inflationary pressure gives the US Central Bank leverage to soften its hawkish rhetoric. However, two Fed's policymakers advocated for further monetary tightening. New York Fed President John Williams stated that the next policy decision on an interest rate change would again be adjusted to high inflation, which remains the burning issue. Inflation overshadows even the recent turmoil in the banking sector. Market participants absorbed the warning. According to the CME FedWatch Tool, the likelihood of a further rate hike is now assessed at almost 59%. The US dollar regained its footing following such remarks and looked moderate growth. On a Monday, its index, which measures the strength of the greenback against the basket of 6 major currencies, climbed to 202.80. The greenback owes its recovery partly to unexpected cuts in oil output by OPEC and its allies. Inflation is doomed to stay at elevated levels if oil prices continue their rise. It means that the US Central Bank will have to increase interest rates to contain consumer prices. With such prospects, the US dollar began a new trading week with moderate optimism. Its index is expected to trade in the intraday corridor between 102.60 and 103.10. The greenback traded on a roller coaster for the first time, first 3 months of the year. Interestingly, its index sank below 101 points in early February to the weakest mark in nearly 10 last months. The index rebounded a bit later on, but its overall trajectory was bearish. In case the price breaks support, the instrument could begin a challenge of a low of 100.80 recorded in February. A bullish trend reversal seems unrealistic at the moment because market participants are turning sore on the US dollar. To enable growth, the US dollar index has to surpass resistance of 104 points. However, further trajectory will depend on incoming macroeconomic data. First and foremost, on the US non-farm payrolls, which are due on a Friday. While the US dollar is gaining ground in sync with the yields of US treasuries, at the same time, the yen is giving in to the greenback's pressure, and the dollar-yen pair rose to 133.50, an intraday high, which is very close to the highest level in 2 weeks. The US dollar is expected to hold the upper hand over the yen. The currency pair traded in the intraday corridor between 132.80 and 133.80 today. The yen is likely to extend its weakness amid steadily rising yields of treasuries. Under the alternative scenario, if the Federal Reserve moderates its hawkish policy, this will put pressure on the US dollar. Besides, if the non-farm payrolls discourage dollar bulls, the greenback will come under selling pressure. As for the economic calendar, Japan's manufacturing PMI rose to 104.20 in March from 108.60 in February. The likelihood of an oil rally will hurt Japan's commodity imports. On the top of that, the weak yen will put a strain on domestic manufacturers. The Australian dollar neglected the greenback's advance in an Asian trade. The Aussie opened the week with the high volatility and climbed to 0.6695. First, growing oil prices provide commodity currencies with support, including the Australian dollar. Second, the Reserve Bank of Australia is holding a policy meeting tomorrow. In its recent minutes, the Australian regulator said that it might hit a pause button in the cycle of rate hikes. Some currency traders seem to have priced in this scenario. A steady rally over oil prices will aggravate inflation risks. And today the AUD-USD pair traded in the corridor between 0.6651 and 0.6702. The New Zealand dollar opened on Monday on a pessimistic note. It slipped to 0.6332 against the US dollar. And the culprit of the Kiwi pessimism is a decline in China's manufacturing PMI. The index by Taishin dropped below 50, so technically it means contraction. The Reserve Bank of New Zealand will deliver its verdict on interest rates this week. The consensus suggested that the rate hike is imminent. Apparently, this policy decision has been already priced in. The NZD-USD pair traded lower within the corridor between 0.6208 and 0.6267. Market participants are braced for a turbulent week. The economic calendar reminds us about the US services and manufacturing PMIs as well as a government report on the labor market. The central banks in Australia and New Zealand will make their policy decisions. Keep close tabs on global financial markets on the InstaForex TV channel. Your feedback is appreciated. Good luck in your trading and stay tuned with us.